Hey everybody, Allison here, and in this video I want to talk about Tesla. So the reason why Tesla's on my watch list, and it's been on my watch list for a couple weeks now, is because it's started to see a beautiful run to the upside here. Great run higher after falling down at the end of last year. And it's recouped now back up to the 100 period simple on the daily chart and the $200 price level. And the $200 price level in particular is an important level for Tesla because it is a level that has acted both as support and resistance the last few years. You can see back here in 2021, it acted as a support level whenever the price got down close into that range. We've ended up holding and bouncing back up. It then acted again as support mid-year in 2022. And then more recently into the close, it attempted to hold as support, but then we finally started to break below it. You can see the next few weeks, the price kept going back up to 200 to test it. It held as resistance, and then we reversed back down. Since this recent bounce up, it's allowed momentum on the weekly chart to reset, but notice that we are now at this psychological level of 200. We're at a price resistance level because the price is trading below that level, which has certainly been a strong level in the past. And it's also at technical resistance levels with the ATR trailing stop on the weekly chart, and then it being right by the 100 period simple on the daily chart. We also have two valid bearish divergent bars that could look for potential pullbacks down to 183, 182 respectively. So I would still keep my risk low on this, right? Because if the market really bounces up or if Tesla continues to have good news, it could be that this is finally the time we break back above 200 and move higher. However, if you think we could at the very least stall here, if not continue to the downside, there might be a few trade ideas to consider. The first one would be to do an unbalanced butterfly around 200. The idea that we could chop here, right? We could remain flat, but the underlying price is not breaking 200 into the end of the week. Currently, this is about a 70-cent credit, so as long as this underlying price remains out of the money on this trade, you would walk away with 70 cents of credit. If you bounce up into 200 but don't break above that level, then you actually have a max profit potential of 320. 2.5 with the spread plus 70 cents equals 320 max profit potential. The risk of 180, 250 minus 70 is 180. The risk of that comes into play if you really start to break above 200. So the benefit of this strategy, an unbalanced butterfly, where the extra contract is on the credit spread. The benefit of this strategy is it can benefit you in chop, it can benefit you on a reversal back down, and even if it bounces up, as long as it doesn't break 200, you can still find a way to be profitable. The only risk is if this really starts to bounce up and break 200. So that's the first trade idea to consider. Now, if that risk tolerance of 180 is a little bit outside what you would normally look at, you might consider like the 187, 182.50 trade. It's a little bit less on the risk side, $1.41. Max profit potential is $3.59. And the idea is if we just follow through with these bearish divergent bars on a lower low, not necessarily fall apart, just move right back down to follow through on the bearish divergent bars, this spread will be partially in the money with your short strike right at the money. So it will definitely allow for some sort of profit based off the cost basis for a quick win. Or if you do want to play this more directional, if you think this could be the catalyst of a stronger rollover, especially if you think the market could be potentially about to roll over after hitting the 4,200 level, then you might consider a more directional play like a long put. The thing to be mindful of here, though, if you decide to do a long put, is that you have the 10 period simple right below US support at 172.08 currently. So if all we do is go down and tag support and start to trade inside the wedge here that is forming, then you have to choose a strike that could still allow for a profit. So something like the 177.50, 175 could still potentially allow for a profit if all we do is go down to 172 and stall. It would push both of those strikes in the money and allow for a quick win that way. So a few different trade ideas to consider. depending on what you think is going to happen here. All of them, though, are looking at the possibility that 200 holds resistance and we may roll over. If anything really starts to break above 200, I'd probably cancel out of these trade ideas at that point to protect capital. Thank you guys so much for joining me on this video. I hope you guys have a great rest of your day. As always, may the trade be with you, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.